Hi everyone, I'm Paul and welcome to my review of Lesson 26 of ICT's 2022 Mentorship Program. In today's video, I'm going to backward engineer the tape reading that ICT did in Lesson 26. If you've watched this video, and if you haven't yet, you really should watch it first, then you'll know ICT is narrating his trade executions from the 1 minute chart. So what I'm going to do is work my way down from the daily chart all the way down to the execution timeframes to help build an understanding of why ICT approached this trade in the way he did, which was actually counter to his bias. But before you do, if you enjoyed today's video, please like it, as that will help other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then click the link in the description to subscribe to my free weekly newsletter and to join our Discord. Now that that's out of the way, let's jump into today's video. Today's video is a review of Lesson 26 of ICT's 2022 Mentorship Program. And our outline for today's video is really straightforward. We're just going to be looking at tape reading from the S&P on the 11th of May. So we're going to start today's video by looking at the daily chart on the S&P 500 or the ES. Now, for those of you who've been watching all of the other reviews of the lesson videos, we've been talking about this price action quite a lot over those videos, so I won't go into a lot of detail, but you'll just notice how we go from sell side liquidity to buy side liquidity. We trade up into this order block, which we talked about in the last lesson, and then as we came and started to trade through this sell side liquidity, you can see we get this acceleration to the downside. And just in particular with this move, you can see we stab down into the sell side liquidity here before we trade back up into this fair value gap. You can see we then get this reaction from that fair value gap and the market accelerates downwards. We actually get this gap, this volume imbalance, and the market continues to accelerate away. We then have this indecisive day, or this spinning top, which is what we talked about in lesson 25. And we're now going to be looking at the price action for the 11th of May, which is basically, the next candle. And so if we think about what our bias would be going into this session, what you would be thinking is that at some point we're probably going to, rebalance this volume imbalance here. But in terms of where the likely draw on liquidity is going to be, in my opinion, is it's most likely going to be down into this bullish fair value gap. And if we zoom right out, you can see we have this bullish fair value gap here, which is yet to be rebalanced. And so if we zoom back in, that looks like that appears to be the next draw on liquidity. There doesn't really seem to be anything that would arrest this downside move at the moment. So I'd certainly expect the market to draw into this level and to continue this downside trend. Now, if we play the market forward one candle, you'll see that's exactly what happens. So we trade down into that fair value gap, and that's where we sort of end after we, react to touching that at the end of this session. Now we've zoomed into our 1 hour chart, and we're just going to, just go through basically what we're looking at on the chart, just to act as a point of reference before we start drilling down to the 15-minute chart and then down into our execution timeframes. So you'll see this is that volume imbalance that we had transposed down from the daily chart. So you can see we still have that volume imbalance here down on the 1 hour chart. And then carrying across our price action from the Tuesday, you can see we have these relative equal highs, this buy side liquidity here, and this sell side liquidity here. So this is the particular piece of price action that we're focusing on, and this is all the data inside the New York Open just here. So if we follow the price action through, you can see we create this low here, the market then rallies, we trade higher, we take out this relative equal highs here as we make this high here, and as we come into the 8:30 open and then obviously the equities open, you can see the market trades down, very strongly lower. We take out this sell side liquidity, and this is actually the low from Tuesday, which is an important point which we'll cover when we look at the 15-minute time frame. We then trade all the way back higher. You can see we paint this very small bearish fair value gap. The market then trades into that a number of times before finally reacting and then trading lower and trading right down into that bullish fair value gap that we talked about from the daily chart. So we've zoomed in now to the 15-minute chart, and this is where it all starts to get quite interesting. And so you'll remember going into this particular session, we have a bearish bias. We're expecting for price to reach down into this bullish fair value gap. And so we're expecting lower prices. But if you'll recall from the video, ICT actually takes a long trade. So he's actually trading against his bias in this example. And we're just going to cover off on why that is. So looking back at the price action we already talked about on the 1 hour chart, we obviously have more granular detail because we're on the 15-minute time frame. You can see this is that low which formed from the Tuesday. We then trade higher. We get these relative equal highs forming here, and the market starts to trade up into those as we go into the session on the 11th. You can see we then consolidate here as we come into that 8:30 open and into the equities open at 9:30. And then you can see we just drop off here at the beginning of the 8:30 open. So that's the 8:30 open right there. And you can see the market just drops off very strongly after that open. You can see we trade all the way down here. We take out that sell side liquidity, and yesterday's low is swept, but there's no follow through. Now, this is a really important point. This is why ICT decides to trade long going into this particular session, so counter to his bias. His view was that if the market was going to continue lower, that there should have been follow through once this low was breached. And because there wasn't, you can see the market reacted quite strongly after it took out the sell side liquidity residing below Tuesday's low here. It reversed quite strongly. You can see on the 15-minute chart here, we created this bullish fair value gap, and then the market continued to trade higher. We then traded into these bearish fair value gaps. So you can see this is that bearish fair value gap which we had from the hourly, that quite thin one. And then you can see we have confluence with this bearish fair value gap on the 15-minute chart as well. So we have a lot of confluence in this zone, and you can see the market reacted quite strongly to that before it traded lower back into this bullish fair value gap again before going back up into the bearish fair value gaps again. It's a bit of a tongue twister, and then obviously traded lower, and you can see it reacted very strongly to that. We take out the sell side liquidity again before we get a little bit of a reaction higher, trading back up into these imbalances before finally hitting that bullish fair value gap which we talked about on the daily chart. Now, if we look into this chart a little bit more, you can see this blue arrow here is where ICT actually entered his long trade. So he entered 6 contracts in total. The first one was 4 contracts and then another 2. Then he exits 4 of those contracts around here. He then adjusts his stop and then leaves it. And then later in the session, I think he gets executed out around here somewhere. So I hope that gives a little bit better background as to why ICT approached this particular trade in the way that he did. Obviously, looking at this, you can see quite easily that a short trade was also available there, but you can understand now, looking at the logic that we just sort of went through, or the steps that we went through, why ICT would have seen this reversal as, interesting, and obviously enough case to give him pause and look at taking a trade in the other direction. And he was actually looking for the market to trade up into this buy side liquidity up here, which would effectively be, pushing out all the profitable shorts before then sending it lower. So it's not that he changed his view on the bias. So it's just his narrative around how lower prices would be achieved, which changed. So the real key marker was that when this low was taken, that we didn't get the follow through, and we had this quite strong reaction to that sell side liquidity, and we got that reversal, which is what made him change his narrative around how he thought the market was going to behave. And he was anticipating that this buy side liquidity would be taken out before we then have another run lower. So let's now jump into our execution timeframes, and we'll just walk through the executions that ICT did and just highlight some of the key points in that narration that he gave for us. So we're just looking now at screen grabs from ICT's video. Unfortunately, even with the top package on TradingView, I can't go back far enough, so I apologize for that, but we can still walk through the slides anyway and just comment on some of the key points or the key takeaways from ICT's narration of his tape reading on the 11th of May. So you'll see this is the price action down to that 1 minute chart. So it looks quite familiar to what we were looking at on the 15-minute time frame. This is that buy side liquidity up here that ICT was targeting. So down here, this is where we had that reversal from the low from Tuesday. So we had that reaction. You can see the market traded higher. And this zone here is where we had that bullish fair value gap from the 15-minute time frame. And you can actually see there's a bullish fair value gap here on the 1-minute chart. So it's just right here. I'll just mark that out. And you can see the market obviously has traded into it a number of times. So traded into it here. You can see we traded up, we traded back into it here. And this is actually where ICT executes his first 4 contracts. So he goes long with 4 contracts here, and he's using the upper bound of that fair value gap as his limit. So we have that confluence between the bullish fair value gap, not only on the 1-minute chart, but also on that 15-minute chart as well. So we can see as the market reacts, so we trade up in to these imbalances here and the market trades back down. You can see these relative equal lows. The sell side liquidity is created here. You can see the market trades through that. We get quite a powerful reaction through that, and then we trade a number of times into that fair value gap. And as I mentioned on the previous slide, we have those 2 fair value gaps creating confluence here, both the 15-minute and the 1-minute. So as you can see, ICT's taken his 4 contracts long in this area, and his first objective is this buy side liquidity residing above the swing high up here. Now he's obviously targeting this buy side liquidity up here as his ultimate objective, but he accepts that this may not be reached. And this is obviously just a conservative approach ICT would be taking, knowing that he's actually trading counter to his bias. So there's just the potential that we may not reach there, and we just might, trade up into these imbalances here before once again trading lower and targeting that bullish fair value gap that we talked about on the daily chart. And so this is why ICT is looking at this buy side liquidity as his initial objective. This is where he's going to take partials. And as we've talked about in lots of the other videos first, it's important as a trader to pay yourself and take some money out of the market, especially if you have a trade going in your favor. So that way you make sure you're always paying yourself, just in case you're ultimately incorrect about your hypothesis about what the market's going to do. You make sure you take some money out, and obviously whatever happens with the balance either works in your favor or goes against you, but at least you've paid yourself something out of a profitable trade. And so we can see on this next slide, ICT adds another 2 contracts. So he's just added them slightly above his first entry just down here, and then he's adjusted his stop slightly higher. So the initial stop was below those fair value gaps, and you can see he's just moved that stop now just a little bit above it. You can see he's placed it just at this swing low here because he's anticipating now that price won't go lower than that level. He's expecting price obviously to go higher, and he's going to keep moving his stop loss as he progresses through the trade. So on this next slide, we can see the market's reaction to the 2 bullish order blocks that ICT's highlighted. So we have one here. You can see how the market's traded back down to that. It's immediately reacted. We have another one here. Again, the market's traded from that and reacted from it. And you can see we've just immediately made this big run, and then we've taken out that buy side liquidity, and that's where ICT has taken his first partial. So he's taken 4 contracts off the table and left the other 2 to run. Now you can see he's moved his stop again, so this stop's now moved to just above break even. And then what he actually does later, which he doesn't cover in the video, is he then moves the stop to 40.2875, and he has to go off and do some jobs or something, and so he just leaves that to run, and he goes back at the end of the video and shows that the market actually stopped him out at that level later in the day. Now that actually doesn't end up mattering to him because that stop is still actually profitable, and he's obviously reached his price objective on the first 4 contracts that he took partials out as well. So overall he's got quite a highly profitable trade, and again, it's a counter bias trade, so it's one where you'd want to be nimble anyway. Thanks for watching my review of lesson 26 of ICT's 2022 mentorship program. Today's video was a little bit different, with me backward engineering or re-engineering ICT's trade from the 11th of May. Hopefully you enjoyed this video and it helped to consolidate some of your learning. If you did enjoy the video, it would be great if you could like it, because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. And remember, if you'd like to hear more from me and join a community of like-minded traders, then check out the link in the description where where you can subscribe to my free weekly newsletter and join our Discord. Thanks for watching, and I hope to see you next time.